Yesterday on the channel, I made you guys a video about 4 famous stocks that are crashing right now and how bad it could get. And I thought today, let's do ones that are taking the elevator up right now. Let's talk Nvidia, let's talk Tesla, let's talk Palantir in this video up here today. And what's going on with these stocks? Like, where is the potential upside here by the end of this year, for instance, right? Tesla stock up another 4% plus here today, up 50% in the past month. Nvidia's up 164% so far this year. And Palantir's up 69.9% so far in the past 6 months, for instance, right? So in this video here today, we're going to talk about the best case scenario for these stocks, what's the price these stocks could go to, and then we'll talk about kind of the realistic best case. So it's basically doing an inverse of yesterday's video, okay? Appreciate y'all joining me as always. Thanks so much for being here, folks. Thank you for being subscribed. New all-time high subscribers in the history of the channel. And my only question for you is, are you subscribed to the channel? If you're not, go ahead, hit that subscribe button, and let's get rolling, okay? Alrighty, guys, so Tesla first up here out of these stocks. Where's the potential upside here? What are we looking at here in the best case scenario for Tesla? So we're up $400,000 now at this point in time on Tesla. It is absolutely rolling in a massive, massive way, right? So first thing I want to start out here is if we look at where the stock was a year ago, today, the stock was actually $281. Now, it's interesting because you look at the stock, it seems like it's gone so high, right? Because it's gone up 50% in the past month, but let's not forget the stock is lower today than it was at this same point last year. And that's despite the NASDAQ being significantly higher than it was at this point last year, and the S&P 500 being significantly higher than it was at this point last year, right? Now, additionally, if we think about last year, like we were in a cycle where things were going to get worse for Tesla, right? Numbers are going to get worse, deliveries, production, all those sorts of things, right? And if we think about where the company's at now, there's a viewpoint certainly that things are going to get better and better and better for Tesla from here, and we've bottomed. Like basically this quarter they're about to report will be the bottom in terms of deliveries, it'll be the bottom in terms of growth rates, it'll be the bottom in terms of margins, all those sorts of things. And the viewpoint is in the back half of this year, things get better and better, and then going into 2025, right? And the other additional thing we got to consider is, guess what? We're a year closer to Fed rate cuts now versus we still had a long way to go at this time last year, right? So those are some things to factor in right off the bat here. Now, another interesting thing, if we want to back it up 2 years, check this out. 2 years ago, Tesla stock was $297. Now, that was in the intense Fed rate hike cycle, right, which is obviously over now at this point in time. The next move for the Fed is likely going to be lower, and it's just a question of, are we waiting 2 months for that, 4 months from that, 6 months from now? That's really the only question at this point in time, right? So we're obviously significantly lower than where the stock was 2 years ago as well, right? Now, the setup for Tesla is absolutely phenomenal. It's a really good setup for Tesla here. So if we look at the quarter they're about to report here in the next, we can call it few weeks, right? They're expected to report EPS down 33% year over year, and they're expected to report revenue down about 3% year over year. Now, keep in mind, Tesla's done a lot of price cuts in terms of their vehicles, right? So that you would expect to hit EPS, although the price cuts have basically stopped over the last few months, but it's still quite a few if you tack on year over year. So that's something to keep in mind. Also, the ramp of Cybertruck's likely hurting margins and hurting profitability in the short term. Something to keep in mind there. However, services has likely grown exponentially versus where we were at last year, so that should be a boost to EPS. And then additionally, Tesla certainly has cut some employees, quite a few employees, versus where they were at this point last year. So, you know, I don't know. I don't want to get too excited, but there might be potentially some upside in regards to EPS. Now, as far as the next quarter, only 2% EPS growth is expected. And then the December quarter, only 6% EPS growth is expected. So the expectations for Tesla are basically on the floor at this point in time. Revenue-wise, revenue is expected to be down about 3% in this current quarter they're about to report. And in the following quarter, 9% revenue growth and 8.5% revenue growth. So, you know, keep in mind, Tesla's usually a company that you're expecting growth rates of 30, 40, 50 plus percent. So let's just call it for Tesla, this is expectations on the floor for Tesla. This is as low as it gets for Tesla in regards to that, right? Now, additionally, here we are, we're now less than a month away from the big August 8th day where they're going to show off Robotaxi, talk about the future of that. We'll, maybe get more information on who's going to lead that business, and there's a lot of rumors out there in regards to what's going to happen there. So that's going to be a huge day. It's massive for Tesla in terms of kind of understanding where Tesla's going over the next 10 years. Not really over the next year, but really it's about where Tesla's going over the next 10 years. And it gets a conversation about Tesla going from just what's the production numbers this particular quarter, what's the deliveries this particular quarter, right? To where's this company going to be at 5 years from now, 10 years from now, 15 years from now as Robotaxi takes off, right? Now, additionally, this gets into the election, and this actually matters really significantly. T-Man's definitely taken a commanding lead in the polls, specifically since the debate. And you might say, what's the big deal? Why does that matter in regards to Tesla? And wouldn't this just be a negative for Tesla? Well, no, not necessarily. And here's why, okay? So imagine a situation where, the view is T-Man's going to win the election, and he does win the election. Well, have you watched any of his speeches? I've watched 2 or 3 because I'm interested to hear what are his points he's kind of leaning on in this election cycle versus 2020 versus 2016. In the 2 or 3 I've watched, all of them he brings up something negative EV related. He makes it sound like EVs are kind of the enemy. Now the reason that's important is if there's a viewpoint that T-Man could potentially take away all the tax breaks for buying an EV, right? Then anybody that's interested in EV is going to be a huge pull forward in demand that comes in Q4 because of the fear of, T-Man's going to take away all these tax credits, the $7,500 tax credits, right? I've watched this play out, and I was a beneficiary of this exact thing in the past, okay? Back around 2012, Obama got reelected, and there was a viewpoint, it was a false viewpoint, but there was a viewpoint that Obama's going to take away all the guns. And guess what? Everybody flipped out, and I owned Cabela's stock at that time, and I was a massive beneficiary because everybody and their grandma went out to buy every freaking gun that was at Cabela's, okay? I'm talking, I'd never seen gun sections like that. You would have thought we were going in the Civil War. Holy smokers, that wasn't no jokers. And if you were around during that time, around 2012, you know what I'm talking about. If you paid attention to the guns in the gun section, you couldn't even get ammo. It was so insane. The demand was at a fever pitch. And so whenever these presidential cycles happen, a lot of people run to these conclusions about this guy's going to do this or that. Sometimes they're false conclusions, but at the end of the day, it actually spurs massive demand in certain areas. And so if T-Man gets elected, which he probably is, it's going to cause likely a huge demand in Q4 specifically, because people are going to be, the media is going to be covering it. It's going to be all over X. T-Man's going to probably take away the tax credits for EVs, and he might not, by the way. But that doesn't matter. All that matters is people are going to freak out. There's going to be massive FOMO that ends up coming in the market, right? So something to kind of keep in mind there. And do I see T-Man losing? At this point in time, no. If B-Man runs, I think he's going to get beat. And then the other additional thing is they talk about, well, what if Kamala runs? I don't think she's going to beat T-Man either. There's really only one person I think could probably beat T-Man, and that would be Michelle Obama. And I don't think she has any interest in running for president. So therefore, I don't think they got anybody who's ready to take down T-Man over there. So that's something to kind of keep in mind here. So my best case scenario for Tesla in 2024, in my opinion, the best it can kind of get up to is kind of the 295 to 315 range. And that's assuming we see margins bottom in this current quarter we're in and just continue to go up for the back half of the year. Also, Elon and the management team signaling that margins are going to get better. We got to see services accelerate growth even to a greater extent. And then we got to see that revenue start going up again and hopefully starting to reach double digits in the back half of the year. That would be very exciting. And if we could see a couple of little, let's call it raising prices a little bit, oh my gosh, that would be substantial, absolutely substantial for Tesla. Now, realistic bull case for 2024, in my opinion, on kind of where this stock finishes out at, I kind of view it at 270 to 290, somewhere in there roughly, right? Which is where we're already starting to approach at this point in time. And this would be a scenario where, everything goes pretty good, but nothing's like insane great, right? And so we kind of finish the year at kind of that 270, 290 range, and then prepare for 2025, which is going to be a huge year in regards to Tesla, specifically for Cybertruck. That's a big thing for Tesla because this is really the ramp year for Cybertruck, but in terms of being meaningful to numbers, that should be 2025. So now let me answer this question. Is there anything that could make me sell my Tesla stock this year? And the answer to that is no. There's nothing this year that could make me sell my Tesla stock. If it goes to 300, 315, I have no interest in selling out of shares. I had interest in selling the stock when it was, getting closer and closer to $1 trillion market cap in the past, and then when it went over $1 trillion. But that was years ago. That was when Tesla was in a very different place at that particular time. I look at it now, and I think Tesla's set up much better for the next 3 to 5 years than when I was, selling a lot of my Tesla shares, let's call it 3 to 5 years ago. It wasn't 5 years ago. It was more toward, 3 years ago, 4 years ago, something like that, right? When I was dumping out of a lot of my Tesla shares. And so I just look at the next 3 to 4 years, and I see a lot of good things for Tesla. When it comes to EV demand, when it comes to their services business, when it comes to growth rates, when it comes to profitability, when it comes to robo-taxi and getting that business up and rolling over this next 3 to 4 years. And so when it comes to, full self-driving completed, I mean, there's just so many things for this company over this next 3 to 4 years that I think it's going to be a very good next 3 to 4 years in regards to kind of Tesla muscle. That's my personal opinion in regards to this stock. Okay, so that's kind of where I see it kind of heading out here in the bull case scenario in 2024. Now, let's talk Nvidia, right? Nvidia's been tremendous stock. I mean, it's crazy because it wasn't even that long ago I bought Nvidia in the public account. I'm very happy I did that because we're already up 49% on the stock, and it hasn't been that long, right? Now, it's very important everybody keeps in mind that basically all the big tech companies, Google, Meta, Amazon, Microsoft, these companies are all talking about they're spending big on CapEx through 2025, okay? And I think Meta's been the one that's been the most crystal clear about kind of CapEx going up in future years. But basically all these companies, if you read between the lines, their CapEx is going up. And when we talk about CapEx, really it's buying Nvidia chips. Okay, let's just call it what it is. And so the only one that really hasn't committed to that is Apple, but that's because Apple's really partnering with several different companies, including OpenAI, which goes back into Microsoft, continue to buy up more and more of these chips. So being that all the biggest customers of Nvidia out there, and by the way, there's a lot of kind of tier 2 customers, you're kind of more tier 1. The tier 2 customers are also basically all confirming that they're going to be spending on these chips like insane through 2025. And so you basically have a guaranteed type situation here for at least the next year and a half in regards to spending on these Nvidia chips. Additionally, Micron's earnings came out a few weeks ago, right, or a couple weeks ago, and Micron reaffirmed the full order book for HBM through 2025, which is basically high bandwidth memory, and that's for AI chips, okay? So if Micron's out here telling you, hey, we're maxed out and kind of what we're looking to produce for high bandwidth memory, that basically is another telltale sign that the demand is insane through 2025, right? And so you have CapEx of these big tech companies all saying they're going to spend, plus Micron coming out and saying that, plus Jensen has kind of, you read through the tree leaves in regards to what Jensen said, Jensen, the CEO of NVIDIA, and, demand's going to be there for sure this year and next year. And when we say demand, we're talking insane demand, which puts us into the situation, if you're waiting on NVIDIA's demise, which I know there's a lot of people waiting on NVIDIA's demise, a lot of people, keep waiting. Maybe, it's a kick the can down the road situation, right? And at first they were thinking, it was just a couple quarters of demand. Then they were thinking, it's just going to be for 2023. Then they were thinking, it's just going to be for 2024. Now we're basically a guaranteed situation for 2025 insane demand. So you got to keep kicking the can down the road in regards to NVIDIA. So maybe 2026, maybe 2027 is a time period, but that's a maybe. Then that's a complete gamble right now. You just got to understand if you're, hoping on the demise of NVIDIA or thinking the demise, you just got to understand you're taking a gamble because that's not guaranteed in regards to the situation, okay? The only thing we know is demand's insane for this year and for next year, right? So, that's a little food for thought in regards to that. Now, I will say NVIDIA's got a double great setup here, So first thing I'm looking at here is earnings per share. So 134% growth expected in earnings per share here, right? For NVIDIA in this quarter they're about to report, and then 73% and then 49%. And when I say about to report, it's still like probably a month and a half away or so in regards to Nvidia, if not 2 months away. So the growth rates in earnings per share is expected to decelerate massively. And so I think there might be potential upside in regards to these 2 quarters specifically, right? Additionally, if you look at revenue growth, 109% expected for this quarter they're about to report, right? And then down to 72% and then down to 55%. And that's another one I'm looking at, and maybe there's a little upside potential in regards to those revenue numbers as well, right? But the other great setup for this company is if you look at the earnings per share growth versus revenue growth for the October quarter, and then you look for the January quarter, right? You're going to find something really fascinating. Analysts basically have the company only roughly in line with revenue growth in terms of earnings per share. Now, generally speaking, a great company like Nvidia, they're going to be able to grow their bottom line at a much more rapid clip than their top line, right? And if you look, and keep in mind, Nvidia's now got a big share buyback on as well, right? So they're going to be able to take shares off the market. And so, for instance, this current quarter they're about to report 109% revenue growth expected, but 134% earnings per share. And any great company should be able to increase their earnings per share at a much more rapid clip than they increase their revenue, right? But then analysts, it doesn't make any sense. It doesn't make any dang sense. The fact that analysts here basically have 55% revenue growth and only 49%, so they expect revenue to grow faster than earnings per share. It doesn't make sense. It just doesn't make sense, man. And so that's a really good setup on 2 fronts for Nvidia here. And that's, if you think about upside potential, that's another reason, right? Now, additionally for Nvidia, Wall Street. You got to understand the game of catch up that Wall Street has to play, okay? So basically what happens is in years where the market's doing well, a lot of these Wall Street fund managers are lagging the market. Now, their benchmark is S&P 500 for the far majority of these folks, okay? That's their benchmark. So they need to keep up with the S&P 500. When I say keep up, let's say the S&P 500 is up 12% a year. That fund manager is kind of expected to be up around 12%. They're not always expected to beat the market, but be roughly in line with that. If you're up only 7% and the S&P 500 is up 12%, you're looking really, really bad. And so this is a game that Wall Street has to play. Now, in regards to this game, it's really played in Q4 specific. And this is when these fund managers start freaking out and they say, crap, man, we're not positioned the best. We're way underperforming the market and we got to play catch up. And so that's what they do in Q4. And guess what? Next thing you know, they start looking at it and they say, I got to buy certain stocks to catch up to this market. What are you going to buy if you got to play a game of catch up? You're going to go overexposed to Nvidia. That's what you do, okay? Or you're going to go, extra exposure to, let's say, the QQQ, which guess where a lot of that money's going? Into Nvidia, right? Or you're going to play some sort of leverage play on the S&P 500 or something like that. But a lot of times these guys are just going to say, where's the major growth stocks that are the big dogs out there? And let me go ahead and buy those. And so they're going to go ahead and do what? They're going to chase and chase and chase and play catch up into a stock like Nvidia, right? And keep in mind, the bigger the move in the S&P 500, the more these folks end up trailing and they will need to chase, okay? And so a situation like this is very dangerous for fund managers. The market's up 17.5% this year. 17.5% for the S&P 500. So if the market's up that much, okay, and all of a sudden you're going into Q4 and let's say by that time the S&P 500 is up 19% and you're only up 8% or 7% or 10% because you weren't positioned nearly bullish enough, dude, you're screwed. You need to chase the market. Otherwise, you're going to end up losing a lot of clients. You're going to look really bad to your bosses or whoever, right? And so next thing you know, you got to chase the market. And by chasing the market, you buy Nvidia. And that creates another kind of upward cycle in regards to Nvidia's stock price. And so then if you have the fundamental case, which is kind of this here, going with a Wall Street chase of playing catch up, then you can get kind of supercharged stock price move in regards to Nvidia. Now, by the way, I don't think Nvidia will be the only beneficiary of this kind of chase at year end. I think Meta will be and Amazon as well, because those are 2 other stocks that people look at to kind of outperform the market. And so they put money into those sorts of stocks as well. I just think Nvidia's the biggest, easiest play for a lot of these fund managers to chase the market with overall, okay? Now, Keep in mind, also, we're going to start having hype at the end of this year, so meaning like Q4, about new chips being shown off in Q1, okay? And so that's kind of another hype cycle. We know Jensen's already come out and said that basically they're on an every year chip cycle, where every year they're going to show off new chips and launch new chips, and so you're going to have that as well, right? Plus, you have additional, like, let's say the software business revenue start to build out a little bit in, let's call it the back half of this year, specifically more Q4, right? And then leading into 2025, and that's an opportunity Nvidia hasn't even really touched yet. And I think a lot of people are going to get excited about that software revenue, especially if Nvidia starts breaking that out at the end of this year or beginning of 2025, because then they're going to start to see a new business line with some exponential growth there. So that's another little food for thought in regards to that. So as far as Nvidia stock, where do I see this stock in the best case scenario for the end of this year, and then kind of the realistic bull case for the end of this year? Best case scenario for Nvidia at the end of this year is like $190 to $200 a share. That would put it, if the stock's sitting at about 200, that would put the market cap right around $6 trillion, which I know sounds like an insane number, but as long as they keep putting up these insane growth rates and that earnings per share keeps going to where it's going, you know, it's not crazy to imagine it going to a $6 trillion market cap actually this year. And then as far as a realistic bull case for Nvidia, I think that's kind of around 150, 175. So putting it at about a 4.5 to $5 trillion market cap. There's already somebody on Wall Street that's already calling for kind of this sort of price range. There's actually a couple folks now at this point in time. And so that's kind of the realistic bull case on kind of where I see the stock finishing out this year. But yeah, if everything goes great, they beat those numbers, they smash those numbers, and then you get catch up. Don't be surprised if you hit a 200 this year, right? And that would be very, very intriguing. Before we get to Palantir here today, pinned comment down there is going to be application. If you're looking to join my private group, get access to all my best course curriculums on building your wealth, what I look for in stocks, teaching you everything from income statements to balance sheets, cash flows, PE ratios, price sales ratios, value in companies, exclusive weekly videos, my private Discord chat with the 6 to 7 figure community, ability to see the moves I'm making my $2 million plus Fidelity account each week, all those sorts of things. If you're interested in joining there, pin comment, fill out that application. We'll see if you're a good fit to join us in there. Palantir. So we have now comfortably hit a 200% up on Palantir stock. This stock is just an absolute beast. And congrats to all Palantir bulls out there. Whew. It's been a long ride, hasn't it? It's been a long ride, but man, has it been a good ride. First thing I want to show here in regards to Palantir is Amit posted this. Saw this on X here today. Customer count is growing 42% year over year and includes a mix of public companies, startups, and government agencies. And yeah, their list of clients is getting quite extensive now at this point in time, right? And I don't think we've seen anything yet. I think there's a long way to go in regards to Palantir's client list. I think that list is going to get bigger and bigger and bigger and more impressive. But yeah, the names on these lists, you look at a lot of these companies, you're like, dang, man, like Palantir, they're really on the pace to become a big dog in the market, right? Now, there's 3 good things I'm showing you right here in front of you right now, okay? 3 very good things, okay? First off, as far as where analysts are at with EPS growth for this company, or excuse me, what we're looking at here is kind of the past few quarters in regards to revenue growth. Okay, that's the first thing I want to look at. We'll focus over here and over here after. The first thing is, look at what revenue's done over the past 4 quarters. It went from 12.7% revenue growth to 16.8 to 19.6 to 20.7. So Palantir is showing you clear as day it's in revenue growth acceleration mode right now. And that's extremely exciting for this company, okay? The growth is accelerating quarter after quarter because that's not usually what happens. Usually it goes down, down, down. They're on an upspell right now, right? Additionally, right here is very important. If you look at how much they beat numbers by or missed numbers by, if we go back, 4 quarters ago, they missed revenue by $550,000. Then they beat revenue estimates by 2.2 mil. Then they beat revenue by 5.5 mil. And then this latest quarter, they beat by $16.7 million. So the beats in terms of revenue beats are getting bigger and bigger and bigger on an absolute basis. And so that's something you want to see as well. That's great news, okay? And the third thing that's really good here is look at the earnings per share. It came in at 8 cents, 2 quarters ago. And this latest quarter, it came in at 8 cents as well. And you may say, what's the big deal about that? Why is that good news? Well, let me show you. Analysts had the company over the next 2 quarters also only doing 8 cents and 8 cents. Now, Palantir's revenue is going up substantially right now, right? I have a feeling they might be able to do better than 8 cents over this next couple quarters, okay? And so the expectations for earnings per share, despite all this new revenue growth coming through, is very low for Palantir, right? And so I think that might be a big mistake analysts are making here to have 8 cents, 8 cents. And by the way, if we go 3 quarters out there at 9 cents. So those earnings per share numbers could just come in a lot better than I think a lot of people are anticipating, which would then drastically change the way you're going to value this company, right? Because if you're looking at it on a forward P basis and you think it's expensive, well, what happens if they come in with 10 cents this upcoming quarter and they come in with 12 cents the following quarter? Well, shoot, that's a huge substantial difference there. And then you have to start factoring in what are 2025 numbers, right? And then you have to completely change how you're valuing the stock, basically, okay? So that's big. That's big, guys, okay? Now, also, there's a great setup in regards to revenue. So analysts have this current quarter they're about to report 22% revenue growth, and then they have revenue start to go down, 21.9%, and the following quarter, 20.5%, right? Now, keep in mind, these quarters here are coming off of very weak revenue numbers in terms of growth there. So the comps are actually, I think, pretty easy over this next 2 or 3 quarters here. Now, additionally, I think analysts are off in terms of what they're expecting for revenue. Kind of what I'm looking at, I'm thinking like 24 to 25% revenue growth in this quarter they're about to report here, based upon the kind of the commercial demand with AIP, and then based upon all the new customer count, and then based upon the government contracts we're seeing come in. I don't know. I think growth rate could be closer to 24 to 25%, which then you have to completely alter your revenue numbers over the next couple quarters as well. Because then if you're 24, 25%, then because Palantir is a recurring revenue business, you're going to start to consider, okay, maybe it's not 21.9% revenue growth, maybe it's 27% in the September quarter, and then maybe 29% in the December quarter, which is a really easy comp, right? Which then starts to bump against Alex Karp's old 30% revenue growth numbers, right? So I think Wall Street's underestimating the demand for AIP, the interest that's driving the company for Foundry as well. And I think they're also not taking into account these new government contracts that are coming in that is really going to end up providing, I think, incremental upside in terms of a few percent here and there that I don't think a lot of people saw coming, because these government contracts are big. That's the thing. Like commercial, it's about kind of more volume, but in terms of government contracts, you see the value amounts. Some of these are coming in, it'd be like a 5-year contract, $480 million. And like a lot of times these contracts are for a few years, but it's like several $100 million, right? So a little food for thought in regards to that. And that's a really good setup. Now, if we look at Palantir, this was for their first quarter. They reported their first quarter 2022, right? Before the Fed hike cycle really kind of damaged the business cycle, right? Before the business cycle was disrupted, Palantir was growing revenues 31%, right? And that was before the AI boom that obviously has taken interest to sky-high levels. So if you think Palantir can't grow 30%, just keep in mind they were doing that prior to this AI boom cycle. So don't be surprised if they can't get back there again, right? Now, additionally, if you think about where the strong companies are in this market versus weak companies, it's clear as day. The strong companies at the moment, and by the way, it won't stay like this for the next 5 years, but for right now, this is a situation. B2B is very strong. That's businesses selling to businesses. It's clear as day. Like you look at B2B companies, a lot of them are doing tremendous right now, right? Look at their stock prices, look at their revenue growth rates, look at their earnings per share growth rates. A lot of these companies are doing the best of the best, right? On the flip side, B2C, business selling to consumers, weak, right? That market is extremely weak. And if you want to know what is Palantir in, Palantir is in B2B, right? Which is a very, very strong market. And if you watch yesterday's video, right? Guess what all 4 of those companies had in common? They're all B2C. They're all B2C. And you could just look out there, look at McDonald's stock and Starbucks stock. I mean, you could just go through the list of these, consumer-related companies, and they're damaged. And so Palantir doesn't have to really deal with that because they're a B2B company, right? Now, additionally, you're going to understand, and I've listened to a lot of these Wall Streeters, they're starting to look for plays outside of Nvidia as well, okay? And so they want some exposure to something in AI, but not just Nvidia, right? Not just Microsoft. And so this is more food for thought. They're going to start to look more and more to a stock like Palantir, right? And this goes into the screenshot I took a few days ago. This was back on July 1st, right? And I took the screenshot, and there it is on CNBC. They're showing Microsoft, Apple, Google, and Palantir, right? Dan Ives is talking about all these different stocks, and I just thought that was tremendous. Like seeing Palantir up there with those sorts of stocks of that caliber, like holy smokers, that's no dang jokers, right? And so we're in a situation here where Palantir is going to get more and more exposure. More and more of these Wall Streeters that are looking for exposure to AI are going to be looking like, who are the real players? And Palantir is one of those real players. And so this could definitely benefit Palantir's stock price in a very substantial way, right? And so that's something to keep in mind. Imagine if the growth rates are they're beating analyst estimates quarter in, quarter out, while everybody's trying to look for this exposure in AI. I mean, geez, that would just add fuel to fire. Where do I see Palantir stock going? Best case scenario, 2024 as the stock finishes up at $35 to $40. That's best case scenario, which would be pretty incredible. They need to come in and smash these revenue estimates and earnings per share estimates for the remainder of this year. They do that, we might reach there, okay? Now, realistic bull case, I think it's kind of in the $27 to $32 range, right? So somewhere around there roughly is kind of the realistic bull case I see in this particular situation here. But yeah, it's good time to be an investor of any of these sorts of stocks, right? It is a dang good time. Appreciate everybody joining me as always. Thank you so much for being here. Appreciate everybody. Pin comment down there, folks. Pin comment to apply to join a private group. Learn everything I got up here. And yeah. That should help you build your wealth and take your game to the much higher levels than where you're at right now. That's for dang sure. So pin comment down there. We'll see if you're a good fit to join us in there. Much love and have a great day.